Good morning and welcome to our webinar where we will be discussing important results from the Florida Legislature's special session. My name is Amy Sanchez and I'm the president of Central Florida for FirstService Residential. And I'm joined today by Travis Moore, president of Moore Relations, a longstanding legislative partner of FirstService Residential. Hello and good morning, Travis.
Good morning, Amy. Thank you. And thanks to all of you for joining us today.
Absolutely. So the Florida Legislature completed a 5-day special session on May 24th, resulting in sweeping condominium safety and property insurance reform. Today, we will be discussing two of the main bills that were just signed into law. Senate Bill 4D, a building inspection mandate prompted by the June 2021 collapse of Champlain Towers South and Surfside that we've all heard about, and Senate Bill 2D, aimed at property insurance reform. We'll be discussing inspections, certifications, reserve fund requirements, and what impact these changes will have on community associations. Please note that we will be recording today's webinar. It will be made available on our website in the coming days. We will also be sharing our special session legislative alerts with you as a resource, and we'll post that in the chat. If you have any questions throughout the webinar, please submit them through the Q&A option on your control panel. If we do not have the opportunity to address all your questions, we'll be sure to have someone from our local team follow up with you. We're going to provide you with as much information as we possibly can today, but as always, we recommend that you consult with your association attorney before making any changes in your community. Okay, so let's go ahead and get started. Travis, the 2022 legislative session was a bit all over the place on these important topics. And while we know you've been doing a great job keeping us informed since early January with updates as we went through the process, for our audience, can you give us a bit of background on what took place from January?
Sure. And as we all realize, communication is key, and obviously those that are participating today understand the importance of that. And so thank you for joining us for this discussion. And the regular session ended in March. And so we had been working on the Surfside response legislation, legislation dealing also with the insurance crisis that we saw coming and we were all experiencing, certainly in the common interest ownership settings. And when the regular session ended in March, neither of those issues were addressed. They had been worked on, certainly, but nothing had passed that had addressed them. So we began immediately continuing our efforts throughout that little bit of interim space there between March and May, pushing the legislature to address those. The first thing was that they did decide to do a special session on insurance, and they announced it early and scheduled it, said we're going to be scheduling this at the end of May, start on May 23rd. And then we began at that point to say, well, there's a real nexus between insurance and what insurance carriers and mortgage lenders and others are now requiring by way of building integrity and maintenance and doing all these inspections, et cetera. Those private sector are requiring those. So, we really think that this should be added to that special session. And we then began as soon as that, and it was not officially added to the call yet. So we started when the session started in that Monday morning of May 23rd with just the inspection piece. We felt like, well, there was some agreement there between the House and the Senate when they had left town in March. So let's at least start with that. And then as we'll talk through this morning, not only did they end up adding that, the governor's office got involved, the governor got engaged, and others. And it became more than just the inspection piece. It became also a lot of some of the other reserve issues that had been discussed as well. Now, nothing that had passed there in May was new or completely, brand new that had not been discussed or been a part of the discussions starting even before January, really in November, when things first started coming out regarding Surfside response. it was just a blend of what kind of the House had wanted and what the Senate wanted. And as is usually the case with legislative action, it was a melding of those two positions. And it was a lot of what the Senate wanted as far as the milestone inspections and the building inspections, and then a couple of pieces dealing with reserves that the House wanted. And then we'll talk about how those will get rolled out.
Absolutely. And I think for the majority of our audience today, following the collapse of Champlain Towers, we all expected that there would be material that came out of this legislative session to talk to these items. And so the result, though, of a 100+ page bill is something that now we've got to start to sink our teeth into and better understand what this means for our associations. So for our everybody listening today, Travis, can you give us a little bit of a summary on 4D and what that entails for us?
Sure. The first thing to know is that 4D, which is the building safety bill. If you look it up, it'll say it's an act relating to building safety, and that's the condo bill that passed. It started off as just a bill dealing with some roofing issues. Those roofing issues are there, and they stayed. They're still also part of the bill, but then added to that was these other matters. And so the title of it was changed to a building safety bill. It only impacts condominiums under 718 and cooperatives under 719, these provisions pertaining to building safety. So that's important. You know, the roofing issues certainly pertain to a single family home roof issues, those things that are in the bill that are insurance related. But the things that we'll be talking about regarding inspections, reserves, studies, et cetera, only apply to your association if you're a condominium or a cooperative, not if you're an HOA. The other thing is, as I said, it's kind of was two pieces. And the first, and here on our screen is the milestone inspection program, which essentially going into after Surfside last June, so about a year ago, it became very apparent that there was no statewide building inspection requirement for high-rise structures. There really isn't anywhere nationwide as far as building structural integrity. There are that are statewide in nature. A lot of what passed will start now be looked at by other states moving forward. There are two cities, Boston and New York, have a facade 5-year facade inspection requirement, so that every 5 years your facades have to be inspected, so you don't have chunks of masonry and concrete, et cetera, falling down into midtown Manhattan. So that's why whenever you're in New York and you're walking around, it's like, why is there scaffolding all the time? Because they have that 5-year, but again, that's just a facade issue, not building structural, and it's just in the city. So the first thing that the state wanted to look at was creating a building inspection program similar to what was in Miami-Dade and Broward, which was just that 40-year recertification program, but again, nowhere else. So they wanted to kind of expand that to be statewide. So what ended up following, and again, this started really in the first iteration of this came out in November of last year, was a 30-year inspection program that your building, if you are 3 floors or higher, has to do. And again, it's just for condominiums, commercial residential structures that are condominiums or cooperatives. Now, Miami-Dade, if you're in Miami-Dade, their county commission is moving forward on saying, all high-rise buildings are going to have to go through their what now would be a 30-year recertification program, but that's certainly up to the counties, and they can do that. But the statewide program is just for 3 stories or higher, and when your building is 30 years of age, and then every 10 years. Now, if you are within 3 miles of the coast, as many buildings certainly in Florida are, then it's when your building hits 25 years, and then again every 10 years. thereafter. And that is just a visual, it's a phase one inspection, just a visual inspection done by an engineer, a licensed engineer, licensed architect. The other portion of this is when this is done is transparency. There was some concern that the unit owners, certainly people buying into buildings, coming in as renters. We had found that in Surfside and Champlain Towers East, in the 12-month period prior to the collapse, there had been 22 sales and 8 leases during that period of time. And so, there's a churning of new owners coming in, and what did those new owners or those new people know? So now there'll also be where your realtor, if you're buying into a building, now has information they must give and provide to you. Also, the local building official, this has to be shared. This summary of this report and it has to be shared with all the unit owners, and the entire report has to be shared with the local building official as well, when it's done, and then every 10 years thereafter, whenever that new milestone inspection is done. So there's a whole phase of transparency that now will have to be followed as well. That inspection will need to be done by December 31st of 2024. So the end of 2024 would be the first time your building, whether it's already 30 years, whether you are become 30 years within the next year, that's when you would need to be completing that phase one visual inspection. If during that phase one visual inspection, there is some issues that are raised, and the licensed engineer architect determines a phase two is needed, then that phase two is done, and that's obviously not just visual. That involves more testing. It's a little bit more invasive, and will create some disturbances, obviously, for unit owners or the association. But it's to get at some repairs that are obviously needed. And then there's a timetable as to when those repairs would need to be done based on when that phase two comes out. So that's the big safety issue that all buildings, again, 3 stories or more, must be prepared to start doing to have done by December 31st of 2024. So about a year and a half from now.
So certainly a lot to chew on and digest. And so part of that is why we've put up on the screen so that listeners and viewers can also see how to differentiate. So 2 big components there, 3 stories or higher, and then geography, how close to the coastline will dictate what set of rules you need to follow. Also timing, just to recap, is that this program will really go into effect, or the inspection must be conducted by December 31st, 2024, right? So big, important items, action items. And Travis, I know that we spoke briefly, there's also an additional step that associations need to take that will come a bit earlier than that. There's going to be some action in 2023 that needs to be on the mind of providers. What do we need to be paying attention for in 2023?
Yes, so there is a reporting requirement. And Amy, thank you for that question, because that's an excellent question. Because I don't want to jump just to 2024 and think that that's the first time any assignment is due. But there is a reporting requirement, not a difficult hurdle, but something that does need to be done by January 1st of 2023. So that is about 6 months from now, that a condominium, again, would need to report to the division of condominiums through DBPR, the number of buildings on the condominium property that are 3 stories or higher in height, the total number of units in each of those buildings, in such buildings, the addresses of the buildings, and then what county those buildings belong in. So again, it's not a lot, but it is something that needs to be done by for all condominiums that are in existence by July 1 of this year. So if it's not if your building's not done yet, you don't have to do it. But if your building is in existence by July 1 of 2022, or your association, all condominium associations that exist by July 1 of 2022, by January 1st of 2023, again, have to report to the division the number of buildings on the condominium property that are 3 stories or higher in height, the total number of units in such buildings, in each of those buildings, the addresses of those buildings, and then what counties, Broward, Palm Beach, Miami-Dade, the counties that those buildings are located in.
So certainly a couple of steps that providers need to be mindful of and board members need to be mindful of: reporting, and then of course the action that's going to follow that, which is the inspection. I also appreciate, Travis, that you shared that this is really a structural inspection, right? So there's a visual structural component to it. And the reason why I point that out is because that's going to be, we're going to get into reserves next and how this impacts reserves. And of course, we're talking about whether or not, and we're going to need to talk about whether or not board members and communities can opt to waive reserves or not waive reserves. And so I'd like to transition a little bit to how this particular bill will impact how communities can manage their reserves. Do you have any insight there?
Yes, and let's go back a little bit as to how and why we ended up where we are. And because I think it's important to know. And we want everybody here to be really in on the know. So as you're talking to other associations, there's a lot of rumors and concerns and anxiety maybe out there. So let's just talk a little bit about how this came to be. So again, going back to the regular session, initially the Senate was focused on the milestone inspection program. And just dealing with that. Then they added some other things that dealt with the association. But mainly on reserves, they thought, well, it's too easy to waive reserves with just a majority of those that show up at a quorum. There's 9 states that require reserve funding. Florida's one of those 9 states. But we have a very low threshold. We have the easiest threshold or had to waive those. And so they said, we need to make this at least a majority of the unit owners kind of thing. So they began to, in that regard. The House at first, when as the Senate began working on this, it came out with their first bill in November. The House really kind of felt like, well, this is more of a one-off. And we all hope, God hopes that it is, that this is something that is unique to that building, both from a structural perspective and also from the way the association was conducting their affairs and their finances. So they were kind of, let's not really feel like they didn't feel like they really didn't need to do much of anything. But then in February, they came out with a bill. And it went further than on the reserve side than where the Senate had been. And they thought, we have inspections in Miami-Dade County. This is where this happened. So it isn't because of inspections, because they have the 40-year recertification program. So what their thing is we've been looking at it, they said, and we think that associations are waiving reserves all the time. They're just totally waiving reserves. So they're not maintaining their buildings. So maintenance is a real problem. And they're treating apartments, associations as just, apartments and hotels, and thinking if it's outside my unit door, it's somebody else's responsibility. And so they're not maintaining their buildings. So we need to make sure that we're going to stop and say, you cannot waive reserves anymore. And then the other thing they thought and also they're using reserves for other things. If they have reserves, they're using them for things like, new carpeting and new furniture in the lobby or something, and not structural issues. So they wanted to get rid of the way reserves are used and the pooled method, and saying you can't use the pool method. You have to have more of a straight line accounting method. And then they also said we we think that there should be a lot more things that are reserved for, and the way we're going to find out about these is by doing this reserve inspection, structural integrity reserve study is what they called it. And so you're going to do that every 10 years. You can do a reserve study as many times as you want, every year, every 5 years, but every 10 years at least, we want to make sure that these components are identified as these are structural integrity components of a building, that you cannot waive the reserves of these. So there was disagreement, as you can tell, between the House and the Senate. That the Senate came back with, all right, well, instead of you can't waive reserves at all, and we have it at 50%, let's go to 2/3. 2/3 of the owners have to vote to waive. The House still said no, and that's how March came along with no bill passing. So the areas, though, that seemed like, as I said, that there was some agreement on, was at least we needed to be looking at these buildings. So when the special session started, initially, the first thing coming out of the Senate was just the milestone inspection program that we've talked about, just doing that. And then we'll deal with the rest of that. The thought was we'll deal with the rest of that stuff, come in regular session. Well, then when the House and the governor and everybody was getting involved, they said, no, we're it's a give and take. They said, we're not going to give this without getting something of what we want. So they gave in and said, all right, we won't deal with the pooled reserve thing of prohibition, that we'll leave that alone. But, and this and that, but the two areas that they wanted to make sure they kept were, we don't want any more waiving of the reserves. And we want this in order to determine what types of structural components you need to be reserving for, we want this structural integrity reserve study done every 10 years. So the agreement was, okay, fine. The Senate said, we'll agree to that, but we need to give associations more time. So they kicked the requirement for that to, they said that this then does not have to be done until December 31st of 2024. So essentially like January 1 of 2025. So as you guys know that deal with your association budgets, by way of example, the budget for the 2024 year or the 2025 year, I'm sorry, is already going to have been decided. You don't start January 1 without your budget. So you could have a vote in November at the unit owner meeting, just like you have now. And, reserves could be waived or structured however the unit owners decide to fund that going into 2025. So really in practicality, where that would start taking effect would be in 2025, because now when you get into 2025, determining the 2026 budget, you can't take that vote anymore. There is no vote anymore to waive in 2025. So we said, number one, associations need more time. And then quite frankly, the way this was stitched together from a legislative standpoint, there are just some things that we think need to be adjusted. And we wanted time. We wanted at least 2 legislative sessions to be able to continue to work, to have all of you continue to engage with your policymakers so that we can get a good product that is both workable and practical. Because that's certainly First Service's goal, is making sure that this is, that our partners are safe, and that the buildings are sound and the investments are safe, people are safe, and then also that it's workable and practical for associations. And so the way this right now, the law is, and again, there's a couple of years to make sure that we get this right, but it says you need to do every 10 years. You're going to need, and the way it's in this section G of 718, a portion of 718, when it goes into 718.112, where it goes and it has this new subsection G, which is the paragraphs that describe what this structural integrity reserve study is. That's where it kind of makes it clear that it applies again to those that are 3 stories and higher, and it says you're going to need to do this reserve study. This reserve study can be done by anyone that's qualified to perform such a study. However, the visual inspection portion of the structural integrity reserve study must be performed by a licensed engineer under 471, which is their chapter, or licensed architect, which is 371, which is their licensed chapter. So that visual inspection portion has to be done, that part of the reserve study. So then we think the way the law reads, but we want to make it very, very clear. And if we need to go in the next couple of years before this takes effect and make it very clear, we've got understanding to do so. And that's to say, well, if your timetables are working, you've just did a visual inspection as part of this reserve study or as part of your milestone inspection, you shouldn't have to do it twice. A visual inspection by a licensed person, for that, if you got to do one, let's make it so that it's done, and it can be used so that when your reserve study expert is doing the reserve study, if just the other day, a visual inspection was done by a licensed engineer and architect, the association can say, hey, include this. This is the thing that you need to finish up that part of the report. And then we also want to make sure that we've got, the number of people from reserve study people that are able to do this, to the proper engineers, architects for the milestone inspections. We want to make sure if you tell everybody starting on Tuesday, you all have to buy marshmallows. Well, if Tuesday comes along and we got to make sure we have enough marshmallows. So we want to make sure that we're doing the things necessary in the next couple of years or before this takes effect to make sure that this can be done. And then are these components now that would be part of this? There's roof, load-bearing walls or other primary structural members, floor, foundation, fireproofing and fire protection systems, plumbing, electrical systems, windows. So these lists of things that now are these structural integrity components. A reserve study is a different thing. A reserve study is a financial tool. So, and it says you have something that has a given life. Your roof is only going to last a certain amount of time. No matter what, it's only going to last a certain amount of time. So in, let's say, 12 years, you're going to need to have a new roof. So what do you need to be doing to count for inflation, to count for everything, so you don't have to do a big assessment in 12 years? What do you need to be doing in that reserve account to make sure you're able to meet that cost when you get there? Well, does something like, I'm not a licensed engineer or architect, but my question is or was, does a foundation, it doesn't have I mean, its useful life is forever. So how do you determine, okay, we've checked, you've got a foundation, all right, it seems a visual inspection says it's fine. I mean, but how do you, you're not replacing that in 12 years. So how, those are the kinds of things that just don't quite work, that need to be fleshed out. And we are committed to making sure that we do that. But the two, so the bill essentially has three components: the milestone inspection, the reserve, that structural integrity reserve study. And then the one right now is also that says, all associations, doesn't matter if you're 3 stories or more, after that December 31st, 2024, you're not waiving these reserves for these structural items. Well, one of the things we have raised that we want to make sure is corrected or clear is that, well, shouldn't that only apply to those that have to have the milestone inspection anyway, or that are doing these structural integrity reserve studies? I mean, if those stay, I mean, if you're a 1-story garden style condominium, should you still have that same requirement on you if you don't even have to do the milestone inspection, let's say? So making sure that those that those changes are clear and made are things that we've already begun talking to policymakers about.
So I appreciate the fact that you summarized those three core areas, right? Because those are some of the major takeaways here. Digging a little bit more into the reserve aspect, one of the distinctions as I was going through and reading the material is that this is really honing in on the structural aspect of the reserve. So one of the questions that we got ahead of this webinar was, will my association still be able to waive non-structural integrity reserves? Can you talk to that a little bit?
Yes, and again, the discussion was, you know, in the meetings and in the rooms where these committee meetings where these bills were being heard, was their concern was not so much about, you know, your irrigation system for the lawn or a palm tree. You know, if you were having to do a whole bunch of new palm tree replanting, those are very expensive. You know, different things that you might be, or, you know, there's people that I know of that have set up reserve accounts for new, very nice, you know, patio furniture and furnishings for and cabanas and whatnot for their pools. Those are not considered life safety, structural integrity items. So those certainly the membership could still waive.
So I appreciate that distinction, as well as talking to the heart of what is driving this bill, and that the essence is to avoid or no longer allow for associations to waive structural aspects of the reserve, right? And putting a bit more framework around that. And another area that comes up often that we haven't touched base on is liability for board members. And Travis, I know that liability, we probably won't get into the full semantics here, but the essence behind being a board member is that there's a fiduciary obligation that that if you take that role, that you're going to do what's in the best interest of the association, and of course abide by any laws that are required of the community. And so a question comes up is, well, what if we avoid reserves or ignore this process? Do you have any insight on what best practices might look like there?
Yes. So I already under 718.111 1 is what lays out the a board of directors fiduciary relationship to unit owners. And this was kind of added to it kind of referenced that and said, if an association fails to complete this, say, structural integrity reserve study pursuant to this, you know, new paragraph G, that such a failure is considered a breach of the officer's or the director's fiduciary duty under that chapter. So in other words, the fiduciary duty section didn't change. They just referenced it under this new section and said, here's what you got to do. Oh, and by the way, if you don't do it, that fiduciary duty that you've always had, that you still have, that you'd be in violation of that.
Mm-hmm. Absolutely. So certainly we would not recommend or strongly caution against even considering that, right? The purpose behind and the heart of this is to avoid waiving of reserves, right? It goes beyond the inspection, to your point earlier. So as we head into this process and learn a little bit more about the bill, one of the items that I know is top of mind for a lot of our board members and community managers is pricing pressure for budget season and all the different factors that our managers are trying to juggle right now. Insurance increases, cost of just doing business as an association is increasing. And a common question, and maybe it's a little bit of a misnomer, Travis, maybe you can help us understand the statute, but is, well, my community might have a ceiling, or I understand that there's a ceiling and I can't increase more than a certain percentage. There's that longstanding 115%. There's a ceiling out there that I can't increase dues by year over year. How do we manage that? Does this law speak at all about allowing us to go beyond that? Does that even exist? Talk to us a little bit about that.
Yeah, and that's a good question. Yes, everything, the cost of virtually everything is going up, and as it always has, but now going up quicker. I mean, we look no further than the line dealing with insurance, as you mentioned. Thankfully, on the other side of that, the values of these units and homes are also going up certainly there's been a great white hot market. So the value that we're able to maintain by being in a common interest ownership setting, that value is increasing as well. So the unit owner has that. But this is going to cost money, and that is something that we have expressed to the legislature, is that balance of we want to make sure, obviously, yes, everybody needs to be safe, but also we don't want to displace people. And so part of just giving more time and allowing for some of these things to be worked out was a part of that calculus. They wanted everybody to be put on notice. You can no longer just ignore maintenance. So they were more, as if you look at it as a balancing act, they were more leaning towards safety, because you cannot have as public officials, and all of us in this industry, you cannot have the largest, worst building collapse in U.S. history happen and it be ignored. So they very clearly wanted to make sure that from a safety standpoint, they thought, this was not the only building built by this developer. This was not the only building built on the beach. This was not the only building built in 1981, et cetera, et cetera. And then they also began looking and saying, and there's a lot of buildings, unlike buildings that have a centralized ownership structure, like a hotel, like an apartment, like a office park, that Marriott, for instance, they're responsible for maintaining that building. That's their hotel. They're going to maintain it. And if the room rates, are going to go up, people are going to pay that. But in a condominium, there is no centralized, it's all of us, all of the owners in a condominium are responsible for that maintenance. And they said, this type of real estate is not doing as well as the others in maintaining their structures. Certainly not anybody on this webinar, but we all know of associations that, again, like I said, treat their buildings like a hotel or a apartment and think somebody else is going to take care of it. Or this is just an investment for me. I'm not even going to own this in 10 years. Why do I have to care about what's being taken care of, et cetera, et cetera. And so they wanted to make sure everybody's now on notice. You have to provide these inspections. You have to do this maintenance. And then now we have time. Now people are, the apathy of people not paying attention is now over. I think people are now really becoming in tune that, oh my goodness, this is happening. So now we have time to work with policymakers to make sure that we're working to make these changes either workable and happen, or show that this is not feasible and this is too much of a balance shift in the wrong direction. To
that point, Travis, I do think
on your 15, on your percentage, there isn't anywhere in the law in 718 or 720 that has that prohibition, but it could be found in documents. There are documents that have that, and that certainly becomes something that as you would have to work with your counsel to say, we have, if in order to meet this, we have to go to our membership and change our documents and say, we're not going to be able to, we've hit our ceiling. And we're not going to be able to, we can't assess our way out of this because we can't assess anymore. So those documents, those percentages would need to be changed by amending the documents, which is certainly not an easy proposition, but something that would need to be examined.
So takeaway, right, would be that if you've got specific rules and your governing documents, connect with your association council. But the expectation as a result of this bill is that there is no waiving. So if the cost puts you at a place that might be in conflict with your covenants, connect with Association Council. The expectation is that you fulfill the obligation of the structural need, whatever that financial cost might be. Travis, I do see a bunch of questions, and this kind of goes back to the type of property. We talked a lot about 3 stories. Have you seen anything in the bill that speaks to how we're going to define 3 stories is rather straightforward, 3 stories and higher, but the geography of being a certain distance from the coast, and how do we define whether or not we're meet within that 3-mile radius from the coast or not? I can't imagine that the bill goes into that much detail, but do you have any insight there as to how that's going to be discerned, or will that be flushed out with time?
Yes. Yeah. So section 3 of the bill, and the first I think 4 or 5 sections are all part of the Florida Building Code. The milestone inspection program isn't even part of 718, just 718 references it, and vice versa. So section 3 of the bill, which is section 553.899 of the Florida statutes, is created to read that this mandatory special inspections for condominiums and cooperative buildings. And in that language that creates the milestone inspection requirement, it talks about how they arrive at the three stories or more in heights, who can do the inspections, the timing of the inspections based on issuance of a certificate of occupancy, and then also is the proximity to a coastline as defined in section 376.031. So again, your attorney is going to be able to work with you to know this, but so that it'll, if you go to 376.031, it's talking about it's not just a river or a lake, because they really wanted this based on saltwater intrusion, that environment, what it does, and thought that, and so they were good and defined. They used already set definitions and just cross-referenced them. But also in that 553.899, where it sets all this up, it talks about the measurements between 3 miles of the coast and not, and then it says, oh, and by the way, coast is defined as the 376.031 definition.
Thank you. You also hit another really good point there, that it's based off of certificate of occupancy is how to define the age of the building. So really great point. Travis, I know we've dug a lot into the 4D aspect, and certainly appreciate your knowledge and expertise on the bill that was resulted from the legislative session. I do want us to spend a little bit of time on 2D before we run out of time. So, and I know it's just a bit of background that there is already a FirstService Residential webinar that was performed last week, diving into this topic in greater detail around insurance reform. And so anybody who's logging on here could get a copy of the recording of the webinar in our FirstService Residential resource library on our website. But can you give us maybe just a brief rundown of what 2D entails?
Yes. So again, going into the last regular session, the 2 issues of greatest importance that we were looking for FirstService, we always have priorities, and we were looking at insurance, coming up with some kind of relief on the insurance front, and then also the Surfside response issues, again, trying to maintain a balance and being a part of that process. Because insurance is the number one, as I mentioned before, the number one budget item, certainly of condominiums, and it's going up. It used to be that an admitted carrier, which is one that is regulated by the state, and then you're also, if your company fails, you're part of the Florida Insurance Guarantee Association, and we had done work a couple of years ago to expand those limits to a $200,000 per unit instead of just $100,000 per unit, et cetera. It used to be that we had about 15 admitted market carriers all fighting for our business in Florida. Now we have 2. So that's not a good, when you go out and you're trying to get 15 people to buy your sofa on Facebook Marketplace, you're going to get a better betting war going on than if you had, if you had two prospective customers. So it's not worked out well from the economics for associations. So that was a priority. Again, they did not pass anything in the regular session, and we kept pushing. So they went into the special session. They called a special session. We were part of the urging of that. And the things that they did, first thing I want to say is, do not expect that your rates are going to go just drop and go down, immediately based on what passed. I think we will see less, the increases will begin to be less, going up at less of a rate. And then I do think that in a year to 18 months, then the peak will have been reached. We will have stopped going up. And then at that point, we will start to see the rates fall. And that's certainly the understanding, because they needed to stabilize the market. And they did a couple of things. The number one, they set up what's called a reinsurance to assist policyholders, or the RAP program. And they took $2 billion, because the state is doing really well and has a lot of money in their general revenue account. So they gave $2 billion, and they said, okay, insurers, if you're going to be here in the state, you're going to need to participate in this program to help buy reinsurance. So every company has a gap between what they have in reserves and what the Florida catastrophe fund, the CAT fund, then takes if it's a massive Hurricane Andrew type deal. But there's a gap, and so they have to buy reinsurance to meet that gap, and that gap has continued to grow, and so they've had to buy more and more reinsurance, and of course that then is passed on as an expense to policyholders. So they've come in, and the state said, we're going to kind of give you a booster chair and give you $2 billion to get you closer, so you can use this, and then you must pass those savings on to policyholders. And it sets up how that's to be done. It sets up how they are to access it based on their market share in the state of Florida, et cetera, et cetera. So dealing with reinsurance was the one thing, and that those savings must be passed on to policyholders. Hold on.
So
yes.
No, so I appreciate the fact that you shared, though I have to admit I was a little bit sad when you said the insurance rates won't drop immediately. We won't see the benefits of this immediately. I was hoping for a little bit of that reprieve.
As we all were.
Right, absolutely. But I certainly understand the fact that we need to fix the marketplace, and that's what the ultimate goal of this is,
right.
to drive.
What these reforms are trying to do is to try to say, carriers, we want you to come back. We want to have a robust market here so that we have more competition, so that we have more availability and affordable rates. And then also companies that have all these policies that are going out of business or leaving, and then all those policies are going into Citizens, which is growing and growing and growing. We're trying to say, we got to put a stop to that as well. And so we got to structuralize this, get this market stabilized so that we have a better market, and then those rates will then fall. Again, is the concept. The other area, one of the other areas, deals with the way litigation is handled on insurance claims in the state of Florida. So I'll use as an example, the state of Texas a few years ago realized, they said, we have 500 insurance lawsuits are being filed a month. And that is just out of control. That's just way too many. So they passed legislation that dropped it to 150. Well, we had last year an average over 4,500 lawsuits filed pertaining to insurance claims every month. So if the state of Texas, another very large state, if they thought 500 was a crisis, we're well beyond that. So Florida represents a little over 8% of all insurance claims are filed from the state of Florida, but we represent over 70% of all the lawsuits that are filed across the entire country pertaining to insurance are filed in the state of Florida. And part of the reason for that is that we have there's an incentive for a lot of claims to be filed and for a lot of attorneys' fees to be generated. There's a balance. We want to make sure that you're able to file a legitimate claim against a very well-funded insurance company. A policyholder, an association says, well, we can't really fight that, so they look. And so you want to make sure that you have an attorney that'll take it on contingency. But then the way those fees, the attorney's fees are, and a lot of this is, I'm explaining this in a simplistic way, but essentially, if you're able to get $1 more than what the insurance company was offering you, so if you had a claim and the association had a claim and the insurance company said, we're going to give you $50,000, and you said no, and you filed a lawsuit, and your attorney was able to get you $50,001, then they now are entitled to a whole bunch of legal fees. And so there's obviously an incentive to generate these lawsuits to just try to get like I said, $1 more. So the way there was essentially tort reform, and the way that insurance claims are handled and the way attorney's fees are awarded was changed. So that it limits, contingency risk multipliers. It eliminates attorney fee awards and assignment of benefits. It does a whole bunch of things on the litigation side. The other side piece was on roofs. Roofs have become the major deal so associations are saying, look, my neighbor got a brand new roof next door. I want to get a brand new roof. And the way roofs have been handled is it's been more like a warranty program. So if I got in a wreck in a 2010 Honda, State Farm is never, ever going to give me in 2022 a brand new Honda. They're going to give me what a 2010 Honda costs today. If people in the auto world could get a brand new car, we'd have a ton of car accidents all the time because you would be like, well, I need a new car. So I'm now going to get in a wreck, and State Farm, Geico, Progressive is going to give me a brand new car. That's not how it works. You get the value of what your car is worth, the actual value that it's worth now. But the roofs were, if you could show, if somebody could get up onto your roof and show that you had, like 25% damage, you then got a whole new roof. And so it became this, let us get up on your roof, and we will find, if you found enough damage, you were able to then get, like I said, a whole new roof. And so insurance companies were getting, they had structured the policy to pay for roof repairs, not whole new roofs unless it was a hurricane type of thing. But now everybody's just getting a new roof. So one of the things though that insurance companies then started doing that to protect themselves is they said, well, we're going to require you, we're not even going to insure you if your roof is over a certain amount so you'd be like, my roof's only 10 years old, and it's got a couple of more years, but I'm being told that because my roof's too old, I can't have insurance. Well, one of the changes in this new bill is it says that insurance companies may not refuse to write up a renewal policy on a home or a condo with roofs that are less than 15 years old, just solely based on the roof's age. So there'd have to be other reasons. They can't just say, wait, your roof is 15 years old. Well, then we're not writing you anymore. It would have to be for other things. So that was a change that was made. Insurance companies may not refuse to write or renew a property insurance policy solely because of the roof's age if an inspection shows that the roof has 5 years or more of useful life. Then there's a whole bunch of other things dealing with, like as I mentioned, roofs and how roofs are handled, and that I think will go a long way. On these three things, it was, the reinsurance, the way lawsuits are handled, and then the roofs, again, it's part of trying to provide an environment that insurance companies are saying, okay, we're going to write more policies and therefore create some competition. Also, I will just mention that the legislation created a new property insurer stability unit to aid in the detection of and prevention of, so we keep just opening the paper and insurance companies are, oh, that insurance company just went out of business today, or you get a letter, we're out of business. You have 45 days to get a new policy. And you're like, who was watching whether or not these insurance companies had enough money to stay? And so now they've created this new unit to be able to have advanced warning on making sure that these companies are monitored better, so that these kinds of surprises aren't happening. They also restarted the My Safe Florida Home program that allow associations to get discounts and other things for things that they're doing. That was a program that we'd had for some time, went away. They've recreated that. And so I think that also will help as well. Again, nothing is going to stop these rates or drop these rates immediately, but that process is the discussion is now started, and I think more will need to be done and built on this as well.
Certainly a lot of moving parts and lots of things to digest for both Senate Bill 2D and 4D, and more to come for sure over the coming months and years as we start to roll this out. I'd like to take a moment, Travis, to say thank you very much for joining me today. I want to be sensitive to everyone's time, and I know we've given a lot of information to consider. As part of our promise to deliver exceptional service, FirstService Residential will continue to advocate for associations before policymakers and regulators to protect the interests of the community associations that we manage. We also have an abundance of information. I know that we certainly want to be dialed in and plugged in here on what and how this comes to fruition. So please make sure that you are subscribed and dialed into our website, www.fsresidential.com, to stay up to date on this material. That's it for us today. I'd like to thank everyone for joining us and have a great day.